Hello everyone, it's HiCom Accounting again. Welcome back to Tax Essentials for Business. In this video, we explain the expenses you can and can't claim as a deduction in your business. Understanding those expenses can help your business reduce tax payable in the legal framework. You can claim tax deductions for most costs involved in running your business. This helps to reduce the income you pay tax on. Finding out what expenses you can claim, when to claim, and the records you need to keep is important to reduce business tax. In this video, we will cover the following topics: how tax deductions work, expenses you can claim as a deduction, what you can't claim, when you can claim your deduction, records you need to keep for deductions, motor vehicle expenses, travel expenses, home office expenses.
1. How tax deductions work.
The Australian Taxation Office, ATO, calculates your taxable income using this formula. Assessable income, minus tax deductions, equals taxable income. It means that when you do your tax return, you can claim most business expenses as tax deductions to reduce your taxable income.
2. Expenses you can claim as a deduction.
You can claim most expenses involved in running your business. Just make sure they relate directly to earning your income. The expense must have been for your business, not for private use. If the expense is for a mix of business and private use, you can only claim the portion that is used for your business. You have records to substantiate what you claim. You may be able to claim deductions for the following types of business expenses: motor vehicle expenses, home-based business, business travel expenses, workers' salaries, wages and super contributions, repairs, maintenance and replacement expenses, other operating expenses, depreciating assets and other capital expenses, carbon sink forest expenses. If you're a contractor or a consultant, your personal services income may affect the deductions you can claim. If you're a sole trader, you can claim the deductions in your individual tax return. If you want advice for your particular circumstances, contact registered tax agent and business advisor like us for help.
3. What you cannot claim.
There are some expenses that are not deductible, such as entertainment expenses, traffic fines, private or domestic expenses, such as childcare fees or clothes for your family, expenses relating to earning income that is not assessable, such as money you earn from a hobby. The GST component of a purchase, if you can claim it as a GST credit on your business activity statement.
4. When you can claim your deduction.
The type of expense, operating expense or capital expense, determines when you can claim your deduction. Generally, you can claim operating expenses, such as office stationery and wages, in the year you incur them. Capital expenses, such as machinery and equipment, over a longer period. For operating expenses, you generally incur the expense when you have a legal obligation to pay for the goods or services. An invoice is not necessary for an expense to have been incurred, but you do need a record of the expense. If you use an item in your business for only part of a year, you generally need to restrict your claim to the period it was used for the business.
5. Records you need to keep for deductions.
If you claim business tax deductions, you'll need to keep records to substantiate what you claim. Under tax law, your records must explain all transactions and be in writing, either on paper or electronically, in English, or in a form that we can readily access and convert into English. Kept for 5 years, although some records need to be kept longer.
6. Motor vehicle expenses.
As a business owner, you can claim a tax deduction for expenses for motor vehicles, cars and certain other vehicles, used in running your business. The motor vehicle must be owned, leased or under a hire purchase agreement. If you operate your business as a company or trust, you can also claim for motor vehicles provided to an employee or their associate as part of their employment. Motor vehicle expenses you can claim: fuel and oil, repairs and servicing, interest on a motor vehicle loan, lease payments, insurance cover premiums, registration, depreciation, decline in value. If a motor vehicle is used for both business and private use, you must be able to correctly identify and justify the percentage that you are claiming as business use. The percentage that is for private use isn't claimable. This is an area where we often see errors made. To avoid errors made, you can speak with a registered tax agent like us to help. Traveling between your home and your place of business is considered private use, unless you are a home-based business, and your trip was for business purposes. You can use a logbook or diary to record private versus business travel.
7. Travel expenses.
As a business owner, the general rule is that you can claim travel deductions for expenses if you or your employee are traveling for business purposes. Your business can claim a deduction for travel expenses related to your business, whether the travel is taken within a day, overnight, or for many nights. Expenses you can claim include airfares, train, tram, bus, taxi, or ride sourcing fares, car hire fees and the costs you incur such as fuel, tolls and car parking, when using a hire car for business purposes, accommodation, and meals, if you are away overnight. You can only claim the business portion of business travel expenses. You must exclude any private expenses such as a holiday or visit to family or friends that is combined with the business travel. The expenses associated with you or your employee taking a family member on the trip. Travel expenses that arise because you are relocating or living away from home. If your employees travel for your business, the business must actually pay for the travel expense to be able to claim it as a deduction. Fringe benefits tax, FBT, may apply if your business pays for or reimburses your employees for their travel expenses. The business can pay for the expense by paying directly for the expense from the business account, paying a travel allowance to the employee, reimbursing the employee for their expenses. A travel diary is highly recommended to record sufficient detail to justify what you are claiming. You have to keep records for 5 years to substantiate your business travel expenses.
8. Home office expenses.
If you operate some or all of your business from your home, you may be able to claim tax deductions for home-based business expenses in the following categories. Occupancy expenses, such as mortgage interest or rent, council rates, land taxes, house insurance premiums. Running expenses, such as electricity, phone, decline in value of plant and equipment, furniture and furnishing repairs, cleaning. The expenses of motor vehicle trips between your home and other locations, if the travel is for business purposes. If you carry on a home-based business, you need to use the right method to calculate your expenses based on your business structure. You can only claim the business portion of business expenses. You must exclude any private expenses. If you operate your business as a sole trader or partnership, you can claim a deduction for running expenses and occupancy expenses. Whether you can claim running expenses only, or both running and occupancy expenses, depends on whether you have an area of your home set aside as a place of business. If you operate your home-based business as a trust or company, the business should have a genuine, market-rate rental contract, or similar agreement, with the owner of the property. This will determine which expenses the business pays for and can claim as a deduction. If there isn't a genuine rental contract, there may be tax implications for you and the business.
Capital gains tax, CGT.
If you were entitled to claim occupancy expenses, or you own your home and receive rental income from your business, there may be capital gains tax, CGT, implications when you sell your home. The main residence exemption may not apply for the proportion of your home, and the periods that you used it for your business. To avoid errors and maximize the tax deduction, it is highly recommended for business owners to contact a registered tax agent like us to help. We take the burden off your shoulders, and help you focus on what really matters to get your business growing.